This content is brought to you by Link2, which makes private equity investment very easy. Link2 is democratizing the process of being able to invest into tech companies and crypto companies. Previously, this opportunity was only available to venture capitalists, hedge funds, and investment firms. Well, now, if you are an accredited investor, you can get this opportunity before you to be able to invest into crypto companies like Ripple, BitPay, Dapper Labs, Uphold, Abra, and many more. Link2 continues to add these respective companies and their portfolio is growing. So this is a great opportunity to double dip, to be able to hold the crypto tokens such as Ethereum, Algorand, XRP, or whatever it may be, and also invest into the companies that are building the infrastructure of the crypto market. And Link2 was part of the group that invested into Coinbase pre-IPO. And of course, that did really well for them. Well, you have the opportunity to catch the next Coinbase with Link2. So definitely check them out. It's once again the opportunity to double dip, just like the VCs, just like the hedge funds. Check out Link2, link in the description. Welcome back to the Thinking Crypto podcast, your home for cryptocurrency news and interviews. With me today is Gareth Soloway, who's no stranger to the show. And Gareth is the seasoned crypto trader and stock trader at verifiedinvestingcrypto.com and inthemoneystocks.com. Gareth, great to have you back on.
Hey, thanks so much for having me. It's always a pleasure to talk.
Well, Gareth, you made the epic call for Bitcoin at 20K to the anger of many bulls back months ago, but you're spot on. So I would love for you to give us the state of the union. We've hit 20K. We went below it. We're currently hovering around there. What are you seeing and what is your next move?
Yeah, so what a drop it's been. I mean, again, there was so much bullish sentiment when we were at that 65, 69,000 level back in October, November. And for newer investors, I want you guys to always remember when everyone is clamoring and kind of just shouting about how great something is, it's usually just about to top out. So you have to start thinking contrarian and not getting caught up in the hype. And the same thing goes on the downside. When everyone is hating something and saying, oh, it's never going to survive. For instance, we saw that in 2018 and early 2019 in crypto, where people started to doubt it. Bitcoin got down to 3,500 or so. And you saw a lot of that same kind of bearish sentiment, overly bearish, panicking, fear. And that was the time to buy. So always remember that going forward. Now, if we bring up the charts here, let's take a look at the charts on Bitcoin. We have come down to this 20-ish K level, which was the previous high from 2019. There were a lot of people that said it'll never go here because it's never gone to a previous high pivot of a past cycle. The reason I thought it would, number one, if we are in a bear market, which every 4 years apparently it is, and this is again proof that this is a bear market with this much downside in Bitcoin. Every bear market, we've seen 80 to 85% correction, which actually means that Bitcoin could go even a little bit lower. Now, 20,000, my high-end target's been achieved. I do think that you should get some sort of bigger bounce here. Right now, it's back above that 20 area. It's going sideways. I'm still in the camp that you could trade back to about 25,000, which would be this pivot low from the Terra Luna collapse. And maybe, just maybe even back to 28.5, 28.7, which is this low area right here. But ultimately, when I look at the way it is, and we talked about bearish sentiment and bullish sentiment, you still don't see panicking yet in Bitcoin. Yes, you see a lot of people under pressure, hurting because of the massive losses they're sustaining, but they're not ready to throw in the towel. And throwing in the towel is absolutely key, or at least that mentality of like throwing up your hands in the air and saying, this isn't working out. This is never going to work out. I give up. That's what we need to see. We haven't achieved that yet, nor have we achieved 80 to 85% downside from 69,000. Now that gives us a target around 12,000, which is my next target. So after a near-term bounce here, I think we roll over again and you break this level and you're going to head down, and I'll do some trend lines on here to this area right in here. So right around this 12,000 area, huge support here. You can see this pivot and this area right here. So that'll be your secondary target. I do hope that that's the low. I don't know for sure if it will be the low, but hopefully it is. I am in the accumulation zone. So anything below 20, as it drops, I'm slowly starting to accumulate a hodl position, meaning that up until this point, I've been swing trading it. I go long at pivot support, short at pivot resistance, and kind of back and forth. And that's how you make great money in a bear market. Eventually, I'm a huge bull on Bitcoin, so I think it's going to go to 100,000, 500, etc. So I do want to start to accumulate down in this range. So I started a little bit at 19,000, about a 1/6 position. And what that means is that I take the amount in total that I want to buy of Bitcoin. So in my head, I think, all right, well, do I want 500,000 in Bitcoin? What do I want? And then I divide it into six amounts. And I started putting that first sixth of the amount in Bitcoin at 19,000. I'll probably do every 2,000 to 3,000 below that. I'll add another 1/6. And this allows me to dollar cost average. So, I'm clearly, I know what I'm talking about when it comes to charts, but I certainly don't know the exact low on Bitcoin. So I'm not even going to try to guess it. Instead, I do dollar cost averaging and slowly accumulate and then wait for that next bull market to take place, which I do think it will. So again, 12,000 is your next target. There's a bunch of cool things that I can show you here on the chart of why that makes sense. If you take a look at this high right here, okay, and then you take this low, and the reason I'm noting this high and this low, because this was basically a straight fall. You had small bounces, but this was pretty much a direct move down. And then you had this 3 months of consolidation. If you take this high, all right, so basically take this distance from here to here, and if you take the same distance and do what's called a measured move, it also gives you 12,000, which gives you that target. So basically you have this kind of interim period right here. And then on either side, you have the downside, this distance equaling this distance. So there's a bunch of cool things that kind of match up around 12,000. I also think it's important for investors to kind of understand that in the dot-com bubble, and when it collapsed, and I really do liken what's going on in crypto to the dot-com bubble, is that you saw many crypto or many dot-coms go out of business. We've started to see that. We've seen Terra Luna, the UST, kind of be gone or go bust. Celsius is kind of a signal, but there needs to be more of that. And so for me, I'm focusing on the best of breed here. I'm looking at Bitcoin and Ethereum. Those are the ones that I feel comfortable holding for the longer term. I'm not sold yet on Solana, Avalanche, Ripple, any of these other ones, because I just don't know yet. And I don't want to take that risk. So for the swing trading side, sure, I'm in Solana right now. I'm in Avalanche right now for this bounce, but not as a hodl position. And that's more of a safety thing. I just don't feel comfortable putting my money at risk when you see the potential of kind of this bloodbath with so many cryptos potentially going out of business. So that's to summarize. Sorry, it was long, but that was to summarize kind of where I'm at on the Bitcoin and crypto markets.
No, that's great advice and great perspective. Excuse me. I've been also accumulating below 20K for Bitcoin. And, you mentioned there could be like a relief rally up to 25 or 28K. And then we could, go down further. And then the catalyst could be, like you said, maybe a Celsius collapse or just macroeconomic factors with the Fed and so forth.
Yeah, that's exactly what I expect. I think that you'll see this culmination. For those of you guys that were around in 2008, 2009, one of the key things that kind of started the final collapse on the stock market was the Lehman Brothers collapse, right? So it was this epic kind of banking collapse. And that kind of began our last flush down before the markets bottomed in March of 2009. So you do want to see that type of thing. If you go back to the dot-coms, if you look at a stock like Amazon, one of the craziest things, and I think we talked about this the last time we talked, was that the pattern in Amazon, it looks identical to Bitcoin's pattern when it topped, this M-type pattern. And Amazon actually dropped from about $110 down to about $7 to $6. So, I mean, that's a huge, basically you're talking 95% downside there on that. I don't know if Bitcoin will do that. The fact that it's a stated run of 21 million, the fact that you have more adoption all the time may keep it from doing a full 95% drop. But you have to, as an investor, if you're a pro investor, you look at all angles. You never kind of hide your head in the sand and say, oh, well, I don't want to think about that. You have to. You're dealing with real dollars and real cents here, and you have to be always ready for anything. So that's one of the reasons why I've kind of spaced out my buys. You might say, well, if you think the low is going to be 12,000, well, then that doesn't make sense to buy every 3,000 down from 19, 16, 13, and then all of a sudden you're at 10. And the key is that as a trader, I've learned lessons the hard way, which is things go below where you think they're going to go, and they go much higher than you think they're going to go. So you have to be prepared for that. And I always want to be prepared rather than be all of a sudden saying, oh, darn, I'm all in on Bitcoin, and it's now 50% lower where my average is. I don't want to be in that position.
Now, the current market conditions for stocks and crypto, and obviously real estate is about to start tumbling as well, is a lot of it is based on what the Fed is doing. And obviously there's a high correlation between crypto and the stock market. And a lot of people are looking at, okay, QT and rates going up. When do you foresee, and then this is a hard question, the Fed reversing and then things start to move back up again?
Yeah, I think the Fed by the end of this year will no longer be talking about rate hikes, and you might even start sensing that in 2023, early 2023, you could see some cuts. And again, I know that sounds crazy with inflation where it is, but I really do think, we've already seen just in the last week, oil has fallen from basically $124 to about $104, $102 per barrel. That's already a big drop. Now, it's going to take some time for that to filter into inflation numbers and bring inflation numbers down. But I actually think oil is going much, much lower. And also the key is going to be, it's not just the inflation side. What the Fed is doing is aggressively tightening. They're reducing their balance sheet. They're raising interest rates. They've stopped all printing of money that has been going into the system. And the economy is starting to kind of go into a little bit of a shock. Now, you don't see it yet because it takes some time to go, but you add in inflation and the impact on average people because of higher oil and gas and food prices. And there is definitely a pullback that could push us into a recession. So I think that inflation will likely come down to a 4 to 5% handle, which is still way above the 2% mandate that they wanted at. But that, when you look at 4 to 5% inflation, and then if you think a recession could hit and unemployment could go to 7, 8, 9, 10%, which one do you think the Fed is going to care more about? And the answer is they'll absolutely care about 10% unemployment if there's only 4 to 5% inflation, and they'll attack that. The only way the Fed knows how to do that is by lowering rates and printing money. So that, to me, could be where Bitcoin bottoms out late this year, maybe in early 2023, as you start to see this kind of recession hit.
Yeah, that absolutely makes sense. I think it's a lot more pain ahead this year, but great buying the dip opportunity or buying the lows. From the stock perspective, are you taking any positions on the different stocks and what's happening with the lower valuations now?
Yeah, so I think there are some intriguing opportunities. The tech stocks were beaten down in the last week. They've bounced quite nicely. I do have some stocks that I'm kind of eyeing here, and I'll bring up my chart and kind of just show you and explain my ideas. So what I do in this type of environment where I still think there's more stock market downside, right? So if we go to the S&P 500, yes, we've come in pretty nicely here, but we're not even back to this line here, which is your pre-COVID highs. So at a bare minimum this year, we're going to go there. I'd be shocked if we didn't. Now, if we start to see a recession later this year, then earnings are going to fall dramatically. Then you see the markets going probably way below that. But I think the key is look for quality that's already trading at a steep discount. So for instance, one of the companies that I've been eyeing is like an IBM, right? So IBM hasn't, you have to go back to 2012 and 2013. This is the weekly chart before that was the last time this was at a high, right? So this has had a long period of consolidation, and it looks to me like it's just starting to potentially break out. In addition, this is a company that makes a lot of money, pays a high dividend. Their PE ratio is relatively low. So the chart, you use the chart as the primary source, seeing the breakout. But then I also like to use the fundamentals to kind of, in a bear market, at least say, okay, at least this company makes money. At least it's been around for, decades and decades and decades. And so therefore, there's probably some value. Maybe I can find some protection in that name. Another one I kind of like, it's a little riskier in my opinion, but it's the new formed company of Warner Brothers Discovery. And the reason why I like this one is, first of all, it's trading at a forward PE of about 7, right? So 7 PE, when you're dealing with tech stocks like Tesla that are still at like 50 PEs, this is a name where I'm like, okay, this makes sense. In addition, Game of Thrones comes out later this year, I think in August. So there might be some new subscriptions that they get based on that the hype around the new Game of Thrones, and things like that. So the low PE, the chart is extremely discounted here. Just going back to when the merger occurred between AT&T spun off Warner Media, going into Discovery, and they joined forces. But again, it makes sense to me. Not to say this can't go down to $12 or $10, but there's a value there that's fundamental, plus a technical oversold signal there, signaling a rally. So again, you have to be a very careful stock picker in this market. It's a market that's a bear market, so it's a sell the rip type market. But I do think there are still opportunities out there. You just have to do a little bit of homework.
Now, the service that you offer with your obviously respective stock and crypto websites, do you provide trading advice or kind of like this, what stocks and what cryptos you're looking at and positions you're taking?
Yeah, that's exactly what I do. So I give out all the trade signals. Like when I find a great setup, I put it out. I say, hey guys, this is a great entry price right here. Let's pick this up, and we go from there. And for instance, I'm proud of this too. It's like, so everyone, if you turned on like CNBC or any of these medias, or even went online, everyone was like bullish on oil, right? So bullish on oil. And I'm looking at the chart, and all I'm seeing is like a massive short signal, right? And so we were shorting oil recently, and oil obviously just took a big dump in the last week, and we made some great money. And I just want to show you this, is that if you look at this trend line here and this trend line here, I mean, look at what you're hitting right up here, right coming into this double top. Yet the media was constantly talking about how energy was the place to be. Energy was the safe haven. And then all of a sudden, oil goes from $124 high right here, and it just hit today 100 and below 102. And by the way, look at this trend line. Look at where the low today was, and look at what it hit. And so these charts really do guide you more than any of this nonsense hype out there. And I was even surmising that as you were going up, notice how you had this big pop when Russia invaded Ukraine. It went to $130 a barrel, then retraced, then up. And then look at how long it's taken to get back to this high. And when a chart takes a long time to get back to a high, it's especially when the media is telling this retail investor to buy, that is telling you that big money is selling into it, right? Because if big money wasn't selling here and you had this crazy hype, this thing should be, oil should be at $150. It should have been at 175. So those are the little things that you pay attention to as you start to learn how to read charts. And it's very, very cool. It puts you kind of in a contrarian to a lot of this media hype and what the analysts are saying. And everyone looks to analysts and says, oh, these guys know what they're doing. They're not a whole lot better than the retail crowd. I'm just to be honest with you guys, they're really not. Chart reading is the purest form of honesty you're ever going to find. If you can learn how to read the charts, you're going to be in such a better position.
You're absolutely right. And I just think about the memes that have been formed around Jim Cramer to do the opposite of what he says, because he's feeding the herd, right? And like you said, you want to have that contrarian view. So you're absolutely right. Final question here. Any tips for, the newbies who are experiencing maybe their first bear market with a potential recession plus inflation? This is a bit different than 2018, 2019. Any tips?
Absolutely. So a few things I would say. Number one is you're not alone. As far as I've come in the last 20 years, I made every mistake in the book in my early years of trading, right? So I did the same thing. I bought at highs because everyone was, talking it up. I sold at lows because everyone was panicking. So it made me panic. So the best thing you can do is learn from this, right? So it's a matter of of using a bear market to recognize that we're not all geniuses in the market, which is okay, because that self-realization allows us to say, okay, I need to learn. And learning, every little thing you learn changes the forward trajectory of your financial future. And I'm serious about that because I'm continually learning today. And like initially, we're all like in a downslope. We're all losing money as investors over time. Yeah, we have our great moves in bull markets because everyone's a genius in a bull market, but it's in the bear markets where truth really shows itself. And so what you want to do is, as you educate, your line starts to come flatter and flatter, and then it starts to incline. And the key is you just want to keep on absorbing as much good quality information as you can, because that line over the course of your life just goes like this in terms of your financial gains. And so education is so important. Again, I think people kind of laugh at education in bull markets because you close your eyes and you throw a dart at the board and you make lots of money. But it's this market that, can you make money in a bear market, that really shows the truth.
Yeah, that's great advice. I've personally experienced that, learning as much as I could after the 2017 run up, and then going through 2018, 2019, and studying the charts, like you said, and paying attention and not listening to financial advice on TV.
And I'll say one thing is that this day and age, it's even harder for retail investors because social media has been so pervasive in its kind of hype. So you get influencers out there that are just like, oh, Bitcoin's going to 1 million. And for a newbie, they're like, oh, well, I'm going to jump on board. You have to understand that a lot of influencers don't know a whole lot. They're just there because, it gets them more buzz and it gets them more. So really, be aware of that. You have to fight off the urges. Basically, you have to learn how to control your emotions. Once you can learn to control your emotions, things become much clearer.
Yeah, absolutely. Gareth, always a pleasure. Thank you for the great advice, and thank you for joining me today.
Thank you so much. It's been great to be here.